Hi. Today we're going to talk about the power of words placed in the proper order and how they can be very, very powerful, or they can confuse your prospect or potential client. We see a lot of CPAs, attorneys, and advisors who are very, very knowledgeable in our areas of expertise in high finance and income tax planning, estate planning, asset management. And when they get in front of a client, let's say they're worth $25 million, that has income tax problems, an unprotected estate, asset management needs, and they start trying to solve those problems. For instance, when a CPA or an attorney or an advisor advises his client saying, Mr. Jones, you're going to need to set up an IDGIT. You're going to need to set up an employee stock ownership plan and make a tax-deductible contribution to this plan, and it's going to benefit your estate, it's going to benefit your income tax situation, and so forth. When you're using words like ESOPs and captives and IDGITs and CUPERTs, even though we may understand what that means, someone who's a business owner, whose expertise is making widgets and selling widgets, we can't assume they understand that. In fact, we know that in many cases those words can confuse that client and can shut down that case or opportunity immediately. And so what we do when we're coaching or training a CPA firm or a law firm and advising other advisors of how to position themselves and which words to use, we would recommend using very, very simple language that anyone can understand. So I would eliminate using these words like IDGITs and ESOPs and captives and CUPERTs and replace them with simple concepts like a box. For instance, that same business owner that has to pay over $1 million of income tax each and every year. What if we set up a structure for you, Mr. Jones, that enables you to contribute, say, $2 million of pre-tax dollars each year to this structure and give you access to those funds in the structure that you can use to acquire competitors, to purchase buildings, or to use as cash flow to help you operate your business? Now, the negative of that structure would be you have to give up maybe 30% of your company to your employees, but still retain control. If we could save you, say, $10 million of taxes over the next 7-8 years, and you would only have to use a portion of that money, say $2 million of that money, to fund, to have enough cash to buy back the stock from some of those employees, would that be a good idea for you or not? Now, again, we're not using complicated terms like ESOPs or captives. We're using terms like structure, or for instance, when we're mitigating an estate in order to reduce the estate tax liability, instead of using a word like IDGIT or a trust that may or may not be complicated to that end user, what if we use a word like a box? We set up a box. We allow you to make tax-deductible contributions to this box. And your children would have the benefit of those resources in that box. However, if you choose to move those assets back out of this box, back into your estate, you'd have that privilege. Does that sound appealing to you or not? So today we talked about words, the power of words in the proper order, and also utilizing very, very simple words that anyone can understand.